The following is a presentation of TFNN. The Morning Markets Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming live from TFNN. We kick things off right where we left off towards the end of Friday. Markets, we got a little bit of a hope for optimism. There was some talk of a deal on Friday. That got overturned. But I think the sentiment in general, we had flights getting canceled everywhere, right? A real impact getting felt. There is an impetus for something to get done here. I think that's what you saw on Friday as some deals started getting talked about. And today we picked things up in positive territory. S&Ps were up by 0.9%, up 61 points at 68.15. And yeah, you're talking about a move of 160 points from the lows of Friday. 160 points from where we were. You talk about an acceleration. NASDAQ 100, we're up by 1.5%. And how about 800 points? 800 points from the lows of Friday. 24,709 this morning. We're up by 365 points or 1.5%. 25,532. Now, in some context here, we're just back to the middle of the day on Thursday. Volatility is probably going to persist here in this market. We got the Dow up by 0.4%, up 176 points, 47,260. And how about the Russell up by 1.4%, up 33 points at 2473. Bitcoin participating, up $2,700, up 2.6% for Bitcoin right now. We jump over to crude, back above $60. We're as low as $58.83 last week. This morning, we picked things up in positive territory, up by 38 pennies at $60.13. Gold catching a bid. How about it? Above 4,100 briefly. We're up by $87 in that gold contract right now at 4,097. You jump over to yields this morning. You got the 10-year right now, 4.12. Okay, 4.12. We're negative by 6 ticks. A little bit of higher yield. The 10-year right now up by 2 basis points at 4.12. You jump over to the dollar. 99.57. No real movement. So no real movement on yields, not to the degree that gold's reacting, right? Yields 2 basis points higher at 4.12. The dollar down 2 pennies at 99.58. And we got metals catching a bid. Gold up by $87, up 2.2%. We take a look at the daily on gold. And what do? That acceleration that began in August, you accelerate, you come back, you chop around the 382, and we're accelerating higher. And yeah, you're going to do some volume today, man. Check it out on the volume. Friday, 198,000 contracts. Today already, 136,000 contracts. You check out the 5-minute. It was right out of the gate basically last night. 6 o'clock you open. It was higher territory up until about an hour ago. We hit a high of 41.15 in gold. You jump over to silver. Up by $1.61. We were just above $50. You put silver on a daily. Didn't quite make it to the 382 of that pullback. You really had volume drop off on the metals, but not going to be the case today. Silver already doing 43.5 thousand contracts. You did 61,000 on Friday. Jump over the VIX this morning. She got a volatility index. How about that for a spike and a give back? 22.72, 18.33. We're negative by 75 pennies. On the VIX, as we got a lower cost of insurance, it seems like they're going to get a deal, but we'll see. It's not going to come until possibly later this week, if it comes at all. So, Senate advances a plan to end the shutdown. The vote was 60-40. Okay, that's what they needed. You had 8 Democrats coming along. I think they list them. There they are, the 8 Democrats. All right, Schumer was not on board with this. His name's not there. Yeah. So it's not quite done yet. It's got to go to the House. Then it's got to go to the president. They could have some problems in the House. This could take almost a few days in here before it actually gets a vote, because this was just a procedural vote. And then one complicating factor is Mr. Senator Rand Paul. And he could potentially impose days of Senate delays to oppose a provision restricting the sale of intoxicating hemp products. It's always like one little thing, right? That's what's going to hold this up. Now, Rand Paul's got more issues than just hemp in what's going on with this administration, okay? But what it actually does that they're talking about here, okay, is that it would pass a full year of funding for the Department of Agriculture, Veterans Affairs, and Congress itself. It'll fund other agencies through January 30th. Nice little, what is that, an 80-day reprieve. The bill would also provide pay for furloughed government workers, resume withheld federal payments to state and localities, and recall agency employees who were laid off during the shutdown. This stuff all seems normal, as in paying people that were working the whole time, right? TSA, all of that stuff. Yet it was one of the ponds that was being discussed by Republicans. Now, it's going to take several days. The Senate will need consent of all members to end the standoff quickly. One senator can force days of procedural delays. We'll see if that happens. The House, they got 36 hours to get back to Washington. And then they're going to have to vote, and we'll see where we go from there. And in the context of this, Democrats wanted the subsidies for the ACA to be extended. That did not happen in this deal if that's what goes through. And they supposedly got that they'll get a vote. Let's see where it is. Maybe it's in the next one. Supposedly part of it is that the Republican leaders promised that there'll be a vote on extending the ACA's subsidies. We'll see where it goes from there. You're going to hear a lot of talk on this one. We're going to find out whether there are procedural delays that go into that. How long is it going to take? What's going to happen when you get to the House? Is the House going to come back? Is Epstein going to come back up, right? That's going to be the stuff that just starts to get thrown against the wall yet again. But it looks like the government will be open, and I hope so. Because as somebody that's got a flight myself, going out Thursday of this week, going to visit some family in Boston, yeah, you better believe it, man. Airports. Saw some visuals over the weekend, right? Airports are going to do it. Real life, folks. Real life. Doesn't matter which side of the political aisle you're on. Okay? Get it done, man. We're approaching the point where we can't fly anywhere to visit family and friends. That's where we are right now. All right, we jump around to some of the Magnificent Seven with this market rallying higher. You got Amazon shares. We're going to be up by about $3, $4 in the pre-market, pushing $248. Or as low as $238 on Friday. You jump over to the big dog, NVIDIA. How about it? Up another $6 in the pre-market to $194 from $188. I was talking about last week, man. Okay, this move that NVIDIA had over a period of 1, 2, 3, 4 trading days, folks. Okay, from Monday's high of 212 to Friday's low of 178. Okay, you're talking about $34 of trading for an equity that has about 25 billion shares outstanding, is $850 billion in market capitalization lost. That is money that was in people's accounts, folks. That is almost $1 trillion from Monday to Friday's low. Okay, if you don't think there's any risks in this market, if you have one equity that can lose $850 billion in market capitalization from the beginning of Monday to the middle of the day on Friday. And the biggest thing is there was no real dire news. You know, that could happen if NVIDIA comes out and it's like, oh, they've been cooking the books. No, that was just selling within a bull market. So we're going to have volatility persisting. But today we got buyers, folks. Markets in the green. We're coming right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and technique to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Welcome back, folks. We got S&P up by about 60 points right now. NASDAQ up by 360. You got the gold contract catching a bit, up by $82. We hit a high of 41.15. Just in the last hour, that's an hourly. We put it back to a 5-minute chart. You see the acceleration up there to 41.15 at 8 a.m. We've backed off a bit, but we got higher prices in the metal. We jump over to silver. Gold's up 2%. Silver's up 3% this morning. You jump over to platinum, up by 2.5%, just above $1,600, and we jump over to copper right now, up by 1.5%, back above $5 as well. All right, we talk about some of the action. Good one from the Journal this morning. I think it makes a lot of sense all around, okay? Feeling great about the economy? I mean, we hear about the K-shaped economy, folks, and it's like, number one, incomes matter, of course. But boy, the appreciation of any kind of assets over the last 5 years, whether you're talking about real estate or equities, it is remarkable. And so here's the reason why I paused there, okay? We're going to get into the numbers, okay? In terms of consumer sentiment, where are you? Well, if you're one of the biggest stockholders out there, you think the consumer sentiment is just fine. You're going to be spending money just fine. Percentage of stocks and mutual funds held by the top 20% of earners. You get that huge acceleration up to 2018. You back off on the COVID pullback, and we're at 87%. But boy, it's been quite a run up over the last 10, 15 years. But the run from 2020 to 2025, Americans gained more than $63 trillion in wealth from the first quarter of 2020 through the second quarter of 2025. That's from the Federal Reserve. Real estate wealth up more than 61% over that time. Wealth from stocks up 127% over that time. And I'd argue, depending on where you are, many real estate markets are up much more than 61% from where they were prior to COVID. Yeah. Excuse me. 87%. Now, what I paused at on the beginning of this is this gentleman they talked about, okay? He's a retired consultant. After one of the air conditioning units in his Brookline, Mass home broke, he decided to replace the whole HVAC system for $72,000. Folks, I want to see that guy's house. Because if you're putting a $72,000 HVAC system into your home, that is a large home, okay? And yeah, he's bullish about the economy, okay? I'm sure this gentleman's got plenty of cash, retired consultant, if you're putting a $72,000 HVAC system into your home. And yeah, they get expensive, but that is a number. But yeah, you talk about consumer sentiment, okay? Consumer sentiment getting a lot of attention, rightfully so on Friday, one of the lowest levels we've seen for some time. But guess what? That's not what's powering this economy right now. It's just not. All right, so keep that one in mind as, you get some dire readings in this market, whatever it is. The level of wealth created, folks, from where this market was in 2020, you're talking about a NASDAQ that's doubled. Don't even take the October low, just coming into where we were coming into the end of 2020, right? You got to back it up further than that now to get the beginning of the acceleration in terms of where you were at the beginning of 2020. Yeah, tripling in price, tripling in price from where we were coming into COVID. Equities. All you had to do was own the NASDAQ 100, folks. You own the NASDAQ 100, you got 200 grand in there, you got 600 grand today. Oh. It's a wild one, man. You check out the S&Ps. Come into COVID at 3,200, you're up more than 100% from where you were at that price level as well. All right, let's jump over to some of the home builders this morning. So, we'll talk about the 50-year mortgage later in the program, folks. We had a great conversation in the Tigers Den on the weekend talking about the 50-year. Everybody was riled up on Saturday, rightfully so. And yeah, they're going to be out there touting the 50-year. You got Lennar. That's a bad ticket, 113. You're trading right now basically flat for Lennar. You've pulled back. You jump over to D.R. Horton. They're not necessarily going to be the benefactors, folks. The benefactors are going to be the banks, okay? Jump over to JP Morgan. You're pushing all-time highs. We're at 315 right now, up a bit. You jump over to Bank of America. 53.50 right now, barely in the green as well. We jump over to some retail. Yeah, they're going to give it back today. So this was the rotation going on, right? When you had tech stocks trading lower, you had retail accelerating higher. Walmart, you're backing off a bit today as the market rejoices. You Walmart slightly in the red. Costco was another winner last week. Yeah, giving it back. Look at. All right, this is what's happening, right? Costco slightly in the red right now. You jump over to Target shares. Yeah, basically flat, 91.50 right now for Target. You jump over to TJX. Trading at about 144. Check in on Mickey D's after their numbers last week. Yeah, Mickey D's trading in the red as well. This is a tech-driven rally right now, folks. Okay? We're going to see where we open in about 5 minutes. You jump over to Tesla shares. Tesla catches a bid with the market. You're back to 438 from 429. Elon secures his pay package, and that was an issue of buy the rumor, sell the news, folks. Yeah, he got his pay package, and the market sells off, and that was the beginning of the whole market sell-off, really. Take a look at the NASDAQ 100 right now. Now, the critical area, if you're looking, folks, is going to be about 300 points above where we're at right now. Okay, we back this up a little bit. You're talking about the lows of October 30th. You're talking about where we bounced on October 31st. You're talking about the highs from November 4th. You're talking about the highs from November 5th. And really, right where we began that sell-off. Okay, that's where you're going to face some resistance in this market. If you're looking for an area of resistance, there it is, folks. Okay, you got a little bit of a ways to go in this market. Higher price with optimism of the government opening back up. And yeah, on the S&P front, that puts you about 32 points higher from where you were. And you see, that's a critical area, right? Support turning into resistance, and we got an acceleration going right now. All right. Let's check out this equity for one of our tigers in the den. Lithium Argentina. Lithium, huh? Resource and materials company, lithium projects in Argentina. We're talking about a $660 million company. And the question is, got a high volume high heading north again. Let's check it out. Put it on daily. Oh, look at that bad boy. Okay. Yeah, hey. You know what I like here is that's a nice area that you're at right now. Baseball, that's what I'll say. That's a nice area. You know, you're coming back. You're testing this area from August. You know, if you get into it, just put a tight stop. You know, you're going to be above $4 on the open. But, yeah, I like that. You get some volume on the acceleration higher. Okay, you sell off on the lighter volume. You backed off on lighter volume. And on Friday, you get a bid with some volume. Yeah, put that stop in there, though. Don't let it go too far. But I like it. I do. All right, folks, we're coming back for the opening bell. Markets in the green. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. We're green across the board right now. We have the Russell. You'd say the NASDAQ is leading, but the Russell as well. Russell up by 1.4% right now. NASDAQ up by 1.5% on the open. You have the S&Ps up an even 1% right now, and the Dow up by 0.5%. And as I mentioned, right, you go around to some of those consumer goods companies, Walmart, Target, Costco, etc. They're not trading higher at all. Tech stocks driving this market, and let's jump around. NVIDIA, that'll do it. up by 3.4%. $170 billion in market capitalization added just like that. Better believe there's an outsized impact when you are adding $170 billion, and there's not many companies in the S&P 500 that are worth $170 billion. NVIDIA adds it within 60 seconds of trading. Amazon up by 2.1%, up another $5 this morning. You jump over to Microsoft, up by 0.6%. Google shares up by 1.4%. A little bit of a give back on the open. Some of the other tech companies, Salesforce flat this morning. We check in on Tesla, up by 3.2%. All right, let's check in on the airlines. Yeah, they're going to like that the market that they're going to open back up the skies. They have to. They're under pressure. Nobody's going to be booking flights. Nobody. Would you be booking a flight for the next couple of weeks? Whoever would book a flight if they didn't have to, right? Just wait. If you don't have to, just wait. Now, people can't wait, though. You got holidays coming up. That's the difficulty. Nonetheless, Delta, we're up by 1.9% this morning. United up by 2% this morning. You jump over to American, up by 2% as well. JetBlue participating, up by 1.6%. And yeah, you talk about the numbers for the airlines. U.S. Airlines, 1,400 flights with total expected to grow. So this is this morning. This went out at about 5:45 this morning, updated by about 8:35. And on top of that, you got snow throwing a wrench into things. Yeah. Snow in Chicago, compounding the travel chaos. By 7:15 this morning, you had 1,432 flights. 5.5% of the day's 25,733 flights. Chicago, O'Hare, LaGuardia, Newark. Highest number of cancellations with at least 8%. So if you're traveling today, Godspeed and check out those flights. So yeah, you got winter weather. They're posting about it in the den. We got a cold front moving across this morning. Even in Florida, we get some cold weather. Always nice. I can wear a sweatshirt. You don't get to wear sweatshirts many times in Florida, and I miss it. And listen, I'm not complaining. Okay, we all have the good and the bad, as in Florida's got it made during the winter with beautiful, but in the summer it's hellish hot. But you take the good with the bad, it all comes. But yes, 1,500 flights, man. So imposed government cuts to daily flight volumes are set to begin increasing 6 a.m. Tuesday. Airlines required to cancel 6% of their services compared with 4%. And that could reach 10% of daily flights by this coming Friday. It's going to take a few days to get the government back open. This is not going to stop, unfortunately, right now. And what's amazing is both parties are battling here, right? You have Schumer, he's not on board. You're going to have Republicans that are upset about not funding it even further, that we're going to do this again to a certain degree when we roll around on January 30th. But nonetheless, that's where we are. Now, you talk about climate, okay? You talk about floods. This one's a good one. I'm going to post this one, a gifted article. I'm going to do it right now. How about let's do it? Let's gift it. There we go. We got the gifted article. We're going in YouTube. Okay, that's a gifted article, folks, talking about climate. And we'll throw this in the YouTube Tigers Den, in the Tigers Den. If you're not in the Tigers Den, folks, get in that Tigers Den. It's $1. Great conversations all weekend even. It was awesome. Saturday, sitting here, sipping some coffee, talking about 50-year mortgages. And we'll talk about that. That's coming up next segment, folks. If you haven't ran the numbers yet, don't buy a 50-year mortgage. All right, consult your financial professional before making your own decisions. But outside of very few cases, or the government socializing the program, okay, that's what you always have to provide, the 50-year mortgage is not going to be more affordable, and all it's going to do is sign you up for a life of servitude to pay interest, not equity, just interest. It's basically an interest-only loan for about the first 20 to 30 years of the loan, a 30-year mortgage. Can't help but want to dig into it. It's coming in the next segment. We're going to talk about it. But this one's an interesting one. Now, we talked about this company. Let's see, where is it? This is nope, that's not it. Yeah, First Street, okay? If you haven't looked up flooding on First Street, folks, check it out, okay? This company, this nonprofit, started putting out real flooding probabilities years ago. I remember talking about it with my dad. So we're going back probably 2018, 2019, right? First Street started putting things out. And what this talks about basically is just that government flood data is wrong. Okay, it doesn't really tell you where you may flood. There's Chicago neighborhoods that they anecdotally pick out, but nonetheless has flooded 3 times in the last 30 years. But the mortgage, it doesn't suggest flood insurance. The government doesn't either. Yeah, we're in a no flood zone. It floods 3 times in 30 years in Chicago. Yeah. They rely on federal maps to assess the risk of flooding. And insurance doesn't cover that flooding, so they're not worried about it, right? Insurance doesn't care. They don't care at all. They're not on the hook. They don't care. That's a governmental issue because they're the backstop, right? Most federal maps overlook millions of at-risk homes across the country, often ones far from the coast, particularly in urban areas where rainfall causes more damage than rising rivers, lakes, and oceans. Check out Austin, okay? 300 calls come from Austin every spring and summer. Yeah, that neighborhood. Now that's Chicago, Austin, the neighborhood. Okay, not Austin, Texas. We're talking about Chicago here. But yeah, they got a big problem. And, for yourself, check out First Street, okay? Because what First Street does, and I'll try and pull it up even. Let's pull it up right now. You can pull in First Street. I'll pull it up. It's going to take too long. But climate risk financial modeling, firststreet.org. Okay, I think this is the site right here. And you can look up your address. Okay, I'll put this in the Tiger's Den. You can look up your address, folks, and it tells you the probabilities. We'll play with that after the next break as well. But yeah, they got to get this under control. Okay, and it's going to take regulations. Listen, coming from Florida, we had that really bad storm a year ago, just over a year ago now. Wiped out many different areas. Okay, and what's going to happen is you're going to be able to rebuild. But in Florida, for instance, you're going to have to build higher. You're going to have to do it where you assume that you're going to get flooded. I mean, if you're buying in Florida, folks, okay, and you're on the coast and you're in a flood zone, okay, not even taking up heart, because that's not what this article is really talking about, okay? This article is talking about those people know they're in a flood zone, okay? There's a lot of people that don't know they're in a flood zone, folks. And I would encourage you to be vigilant, because do not rely on FEMA to come in at the same time that burden is trying to get passed off to the states, okay, from the Trump administration. That is unknown, okay? Trump wants to push FEMA onto the states. Do not assume that if you get wiped out, which had been the case prior. There's a lot of areas in Tampa where you say to yourself, man, if I get wiped out, the whole Tampa Bay area is going to get wiped out, and they're going to have to do something. That's not the case anymore. Check out First Street. We'll talk about it a little bit more. We'll talk some flooding. This market, it's on fire, baby. S&P's up by 76. NASDAQ up by 441. We're coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. And yeah, market's higher. NASDAQ, we're pushing 1.8% in the green right now. S&P's up 1.2%. Russell gives it back a bit. Okay, so interesting to see. We got some selling on the open on the Russell. You get the selling. We're still up by 1.2%, but NASDAQ surges higher, up by 1.8%, carrying the S&P up by 1.2% right now. We check in on gold. A little bit of a give back, but quite a day, up by $80, up by 2% on gold. So yeah, it's firststreet.org, folks, okay? You can sign in, you put your address right up top. Now, this is a pay service, but what I encourage is that they do have a free trial. Okay, I've done it myself. What you do is you have like 3 days. You can put in a certain number of properties. You can sign up for a free trial. You search the properties you want. You get the reports for those properties. And then you can cancel your free trial if you don't want to stay a subscriber, and you pay nothing. So not a bad deal, and it really walks you through the probabilities, okay, that it floods in what's the probability that it floods in the next year, in the next 10 years, in the next 30 years. Most people plan on, if you plan on, I shouldn't say, a lot of the times these days, most people plan on keeping their home. You should not look at the probability of what are the odds that my home's going to can't flood in the next year. Okay, if you're going to keep your home for X amount of years, run the probability of what the odds are that it will flood over any of those years, right? If you're going to keep your home for 20, 30, 40 years, run those probabilities, folks, because the numbers are a lot higher than you would think just by looking at simple flood data. Okay, now let's get into the 30-year mortgage. All right, let's get into it, baby. Now, I was posting this in the Tiger's Den on Saturday. Now, let's see if I start this one off. Okay. Okay, the first image here. This is a 30-year mortgage, folks, where you're buying a $500,000 home and you're putting down 10%. Okay? Now, you can play with all of these numbers yourself. Just Google mortgage calculator. You can play with all these numbers yourself, okay? I'm just trying to assign a standard number. Okay, now realistically, if you're only putting down 10%, you're going to have PMI, which is insurance because you don't have 20% down. PMI stays with you for the life of the loan. Is this going to stay with you for 50 years? Because it stays with you. PMI stays with you for the life of the loan. Even when you gain enough equity, it does not go away. You need to refinance to get rid of insurance when you don't have 20%. We haven't included that, okay? So nonetheless, you put down 10%, you have a $450,000 mortgage. I put in property taxes of $4,000 and insurance of $5,000. Just playing with numbers, all right? Insurance might be a little bit lower, taxes might be a little bit higher, but between taxes and insurance for a $500,000 home, I put $9,000 in there. Okay, play with these numbers yourself. I encourage you. For that loan right now, paying 6%, your total monthly payment is about $3,500. Okay, $3,500, $3,447. So you say to yourself, Okay, what if I just push it out to 50 years because of the amazing new 50-year program? And you got to say it, folks, okay? You got Trump, who's a big real estate guy, but the fact that he has Pulte, okay? Now, Pulte's the grandson of Pulte Homes. He's not involved in the country anymore. But to see online the grandson of a dynastic wealth family that built their wealth building single-family homes, professing the greatness of allowing you, the homeowner, to now own a home if you just sign up for 50 years of debt. Okay? Yeah. Now, you go to the same percentage rate, interest rate at 6%, you go out 50 years, and that drops your payment to $31.18. Okay? So you go from $34.47 to $31.18. You're saving a few $100. The tough part about this is, first of all, the interest rate is never going to be the same. Okay? Take a sip of my coffee as I keep going here. The interest rate's never going to be the same unless the government provides a backstop and they socialize the losses somehow. Okay? Nobody's going to lend you X amount of dollars for 30 years and give you the same exact interest rate to lend you that same amount of money for 50 years. Would you do that? Somebody says, I want to borrow you money for 30 years. Say, what's the rate? Say 6%. Say, what if I want to borrow that money for 50 years? Say, I'll still give you the same rate. No, there's a duration premium that goes up, right? So let's say you bump it up to 7%. Now, it might not go that high, okay? It might not be a full percentage. But if you go to 7%, there goes all your savings. You're actually paying more monthly. $34.57 versus $34.47. Okay? So don't believe it when they tell you that all you got to do is live a life of servitude to pay off a 50-year mortgage to become a homeowner. All right? That would mean that most people are going to be in a mortgage that their life expectancy reaches the end of before their mortgage reaches the end of. There's much more that we can do as a society, folks, to allow people to buy homes than thinking the only way is to allow them a life of slave debt, okay? So for this $450,000 mortgage, look at where the equity is, okay? The principal that you're paying is in the dark blue down here. You paid no principal for almost 30 years, folks, okay? In the 50-year mortgage at 7%, after 30 years has eclipsed, okay, so once you get into the year about 2055, the principal remaining on this loan, $450,000, the principal remaining is $350,000. You still have a $350,000 mortgage 30 years into the future after starting a $450,000 mortgage because you're paying no principal at the beginning of that loan. An amortization schedule that takes 50 years to play out builds no equity. It's essentially an interest-only loan for a large portion of that loan until you make it 20 to 30 years into the mortgage. And you're not going to save money unless it's socialized, okay? Because the only way it makes sense is if it is socialized. And what I find astounding is at the same time that Republicans want to privatize Fannie Mae and Freddie Mac, okay, they're going to introduce a plan that they are somehow going to socialize, folks. The market, this plan does not work if market forces dictate pricing. This plan does not work. Listen to these words. If market forces dictate pricing, does not work. Okay, if anybody could cash flow something by just extending the debt, banks would give you the debt, folks. Banks will give you a loan for anything if they're collateralized, okay, or private credit, right? If you collateralize something well enough, you could convince a bank to give you money for a loan for 100 years, 50 years. If you collateralize it and they can make money, it doesn't work financially, okay? If people could just say, no, give me a 100-year mortgage and my cash flow is going to be amazing and I don't even care about the equity, right? That's because it doesn't work that way, period. It's an interest-only loan. So those are the numbers. Go play with it. The only people that are going to make money on that are the banks, okay? It should give a lift to house prices as well. But tell everybody you can that it's a scam, folks, okay? Tell them. Do the numbers. okay? And if they tell you that it's going to work, make sure they know that that's because the president's going to socialize it, because if it was up to the market, the numbers don't work. One more segment, folks. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets holding on to the gains. S&P's up by 72 points. You take a look at the daily. Quite a surge higher from those lows on Friday, and it's continuing today. Man, we had some volume on Friday. 2.04 million on the S&P futures right now. 381,000. We'll see how the day plays out. We're going to take a look at Lumen for our Tiger in the Den, JK. Let's check it out. So quite a run. You know, the tough part about an equity like this is, man, this thing just traded from $4 to 12. It looks strong. Okay, it looks strong. You had a nice acceleration on volume. What you did do, though, is you got above it on lighter volume, right? This is a daily. You trade up there on October 29th. Looks like they had earnings that, missed, and then you traded higher the following day. Yeah, there's their earnings miss. You get it all back last Friday, 1 week removed. And then you get above that on lighter volume, right? Now we're chopping around. And even if you like this thing, it's time for a natural retracement here. Now, this is a networking company. I was looking up. Is that what it is? Lumen Technologies. What are they? Networking company. products and services in the U.S. and internationally, about $11.5 billion company. Not bad. You're up by 6% today. You're pushing those highs, but look at the volume you're coming into. Okay? So if you've rolled this thing up from $4 in August, you're sitting at 11 right now. You take a look at the weekly. There's a case of what kind of volatility this thing has, right? You break above with volume, though. You do. But boy, many times when you're trading, folks, so often, right? It's where you enter a trade is where you can really make or break. And yeah, it's been quite a run. But look at how you did get above it on a weekly basis, right? October 27th, and then last week you get above it on lighter volume. So be careful of that one. All right, markets in the green to kick it off on Monday, folks. Now, we got a replay next hour. Our man Basil Chapman's out. But then we got our man Steve Rhodes live at 11 o'clock, Fast Market at 12, Larry Pesavento live at 1, and I'll see you back live at 3 o'clock. Yeah, look for that retrace, Jake.